Hi, welcome to the market alert for Tuesday, the 2nd of July 2019. Traders sell the trade, truce news, but S&P holds record highs. And what they mean by the truce news is that there is a truce between China and the US, plus the visit by President Trump to North Korea as well. So this boosted the market, which we saw yesterday. If we look at the daily chart, we saw the market gap higher, and we looked at this in more detail in yesterday's market alert. And I also sent a message yesterday saying, will it hold? And we can see clearly that it didn't. And what you'll find, as you see here, this will the gap to the upside there. If you get a gap to the downside after a down move, it's slightly different. But when you've got a market that's moving higher and you get these gaps, you will see the market come back and fill these. And that's precisely what happened yesterday. There was a battle going on initially, as we've seen a lot of recently, and you can also see prices continuing to move higher and then trending sideways. Then the cash market opened at 2:30, and here you see prices then moving to the downside following the sell signal, and they continue to move all the way throughout the session in the same direction, all below the 20 bar moving average. Once we broke the 200 bar, it was plain sailing. You can see how the market came back through the 200 bar and then hit this resistance here. It's about 38-50% retracement there, not quite 76 at all. Certainly 76% of retracement of this bar, and then the market moving lower there throughout the session. So coming back and filling the gap, which you see here in the daily chart, before the close of trade, when all of a sudden we see on the overnight, at the end of the trade, the market's moving higher. We get a 76% retracement here, and then the market moving higher. And as I've said, they want this market on the highs. So having got the gap filled yesterday, the market now just closing back above the 200 bar and the DP level. So don't be surprised if we don't see this in the pre-market session as we head towards the cash session at 2:30 p.m. Now, news today, nothing to report today, but we do have the non-farm payroll figures out this week. In fact, let's just have a look and see what else we've got this week. Well, as you can see here, it's a very light week as far as high impact news is concerned. And of course, we've got Independence Day on Thursday, so the markets will be closed for the 4th of July. So the main event this week is going to be the non-farm payroll, see if this adds a bit more weight. The economic news is dire at the moment, but this isn't having any impact or effect upon the market as it continues to move to the upside. And no doubts we're going to take out the high of last week at some point, probably today, as this market hasn't got anything to stand in its way, and then all the way to the all-time high. I'd be very surprised if we don't see the all-time high actually hit. Whether it goes and continues past this is another ball game, but the opportunity to do this is present there today and tomorrow with the lack of news, and also traders heading off for the Independence Day celebrations as well, so keep this in mind as well. With regards to the pound, we have a change in trend here. The market starting to move back to the downside, which is why we've got the 76% marked up here. And again, not doing a whole lot. It's more or less range bound. There was certainly the market there coming back through the 200 bar moving average, and then again, as I've said before, if you watch the market come back and then bang its head against the 200 bar moving average, you see prices moving lower. Not a great deal in this move to the downside. There are still pips available. If we just draw this and you get an idea of the range, it's 50 pips there for the pound. So if you're looking at the background, the market sort of sideways to lower there at the moment, and again, no economic news to move this market. Meanwhile, in Bitcoin, this moving lower, the correction following the blast to the upside here to 13,920. The market currently back below 10,000. So a good retracement going on here at the moment in this market. What I'd be inclined to do is to come down to this low here, to this high, and watch the market at the 9,000 level as it approaches. It wouldn't take long to actually get there. And in the 4-hour chart, we had a sell signal here. The market rebounding here and also here before eventually moving down. Now, important area here, the 200 bar moving average is within range for the medium term trend of this market. Watch this level carefully as prices get towards it. And this is around the 9,380 level there. And then in the 15 minutes, we're on the sell side now. You can see their prices coming through, hitting the target, then bouncing, and then coming back and below the 200 bar moving average, all of these sell trades, and also the 20 bar and the 50 bar as well. You see prices and moving lower until we get a bit of short covering there, profit taking. Market comes up, starts to curl round, and then we get 76% retracement here from this low to this high. You can see the line there, bang on it. Market comes through it, you see the buying, and then the market moving back to the upside but not holding, trading up to the DP and the close of Monday. This is the overnight market, and then prices moving lower and then coming back and banging its head on the 50 bar moving average there, and moving lower as we see here. So keep an eye on the 9,000 level. I'll just bring that back up there. You've got that, the 76% retracement. More importantly, this target in the 4-hour chart is one worth keeping an eye on as prices move lower there. So a quick roundup of other news. We've got Deutsche Bank continuing to move higher at the moment. Let's just have a look at the daily chart of this as prices are moving higher at the moment. So we've got this dead cat bounce moving at the moment. How much longer will it hold before we actually see prices move lower? There is a pattern here. You have to go back and see this. You will get these bounces and eventually they return to the downside. So watch a close back below the 20 bar moving average in this market. And then finally, the implied volatility yesterday, the current is 1212. This down from 1366 on Friday. Just do that for you. And there you can see that at the moment we're heading back down towards the 10% area, which is where we want to see this move before we get a big correction in the market. The lower this goes, the bigger the correction that we've seen before in the past. So that's the implied volatility. That's where we are at the moment. A lot more coming on this. It's very revealing when I start looking at this in more detail, what it actually shows, and also allows you to predict with as well. But say it's like everything else, it's going to take it a moment or two, but certainly very, very interesting what we see here, and used in the right way will alert us to when there is the potential for another major correction, as we saw here in April, and we got the drop here, and the same when we look back to other time periods as well, where we saw corrections as well, in specifically the beginning of December of last year. Okay, that will do it for this one. If there is anything else to report today, I will let you know, but I suspect that we're going to see the Dow potentially move higher, as there's nothing to stop it from doing that today. But always keep in mind the battle with the cash market at the open. Okay, that will do it for this one. Thanks for watching. See you in the next one.